LB Trades? I wanted to do a video analysis update on big tech. We're just going to talk about big tech in this video because recently we've seen the value stocks outperform. We've seen the energy stocks outperform. And we've even seen, dare I say, the Chinese growth stocks outperform. What? It's almost like as soon as the year changed, as soon as the quarter changed, an entirely new group of leaders emerged. So I thought it was pretty funny. Recently, a lot of people said the stock market's down, and oil bulls and energy bulls and value bulls, they're kind of like, what? What do you mean the stock? Oh, you mean the NASDAQ 100 is down. So I think that we've seen a little change in leadership, but I think neglecting tech exposure is a bad idea, and I definitely think shorting tech is a bad idea. So we'll talk about that right now. I think this is an ABC correction and a 1, 2, 3, 4, 5 wave 1 and an ABC correction wave 2 that ends at the 61.8% retracement. So I believe the Qs will hold 362. 369 would be pretty tight, but that's really just a $7 range that bulls want to see the NASDAQ hold above. 362, I'll call the stop. The length of wave 1 placed at the wave 2 low says we should not be betting against tech right now, and that the NASDAQ can go to 430 for a minimum wave 3 target. Now, for time targets, this rally is from early October to kind of late November. So 2 months, 3 months, that would be pretty aggressive. But it kind of lines up with a idea that we're going to have a melt up into at least one of the quad witching dates. Aggressively, it's going to be a melt up into the March quad witching date. Okay, I could kind of see that. More conservatively, it would be a melt up into the June quad witching date, possibly a mixture of both. But I think that this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 at the 61.8% retracement. So if the Qs are above 362, the length of wave 1 placed at the wave 2 low says 430 can be hit aggressively by the March quad, more conservatively the June quad. So very important date coming up. That March quad witching date is extremely important. We'll talk about with Apple in a second, maybe Microsoft right now. If some of these melt up counts play out in the February, then I would be extremely cautious going into March. Okay, we'll talk about that later. I don't want to be, the guy who's ringing the alarms yet. Okay, but the March quad witching date is going to be extremely important. And what I'm kind of trying to say is I could see a scenario where we melt up into the March quad. If we look at Microsoft right now, this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 at the 61.8% retracement. So if Microsoft is above 295, the length of wave 1 placed at the wave 2 low says that Microsoft can go to 373 for a minimum wave 3 target. Now, I know that sounds crazy that Microsoft can go to 373, right? Big numbers are scary, but this is most likely a wave 1 and a wave 2 ending at the 61.8% retracement. So if we're ever above 349 in the future, really the only Elliott wave expectation is that the equal legs target, whether this is a wave 1 and a wave 2 or a wave A and a wave B, will be met for a wave 3 or a wave C. That's about 373. Just like the NASDAQ, that can be seen very aggressively by the March quad, more conservatively by the June quad. But I would not be betting against big tech right now. I think what a lot of retail traders are going to do, they're going to see all these oil stocks doing well. They're going to see, maybe what's happened in the past few weeks with Chinese growth, and they're going to say, oh, tech is dead. It's not dead, okay? It's lulling you to sleep. We'll talk about that with NVIDIA and AMD in a second. SPY kind of shows how this could get explosive in the market. 1, 2, 3, 4, 5, wave 1, ABC, wave 2, wave 1, wave 2, possibly, yes, another wave 1 and another wave 2. Now, I know that sounds like I'm just saying 1, 2, 1, 2, but let's just be clear. If we're above 448, wave 2 is already in. The length of wave 1 placed at the wave 2 low says the minimum wave 3 target would be 495. Now, why am I saying the word minimum with a lot of emphasis? Well, from this low, this could be a wave 1, wave 2, and another wave 1 and another wave 2. So one of my favorite colleagues pointed out yesterday that if we get SPY above this level of about, say 480, look out. Why would Elliott wave theorists say look out if SPY is above 480? Because then that would really support the idea that this is a 1-2-1-2 Elliott wave nest on a very small degree. And what we just talked about with Microsoft and the NASDAQ, the stage is set that this could happen quickly. Okay, this could happen very quickly. We have the March quad witching date around the corner. If SPY is above 448, the rally to 495 is not going to be quiet. And to be honest, it's probably not going to stop at 495. But if we see SPY in the 500s and we see the kid at the bus stop talking about the required reserves ratio, then, you know, we're probably going to be very cautious for the March quad witching date, because that's going to be an extremely important date. That is most likely going to be the largest option expiration date in 2022. This is Apple. It forms a wave 1 and a wave 2. I believe this is another wave 1 and another wave 2, but the most important count for Apple is that this is a wave 1 and a wave 2 and a wave 3 that goes past the 161.8% extension of wave 1. So I think right now, if Apple is above the 50% retracement of 160, that is a great level to stay above. The length of wave 1 placed at the wave 4 low says that Apple's going to go to that big round number of 200. It's doing that classic wave 4 bull flag right now. I think the length of this rally placed at this low is going to take Apple up to 200. Now, really, in any wave count, that's either going to end this red wave 3 or it's going to end this black wave 3. So Apple getting to 200, that's going to be an extremely important level, because that's going to be a 1, 2, 3, 4, 5 waves impulse. And if it's Valentine's Day and Apple's at 200, the kid at the bus stop is talking about iPhones, that March quad witching correction could happen, okay? And I want to say right now that if there was a big correction in just, let's say, the market after kind of a wave 5 higher for Apple, then this would be a big buy. What I would be expecting if Apple, and this is getting a little kind of, you know, far out there. I don't like to try to make too many predictions. I know that sounds silly to a lot of people, but Elliott wave is predictive in nature. That doesn't mean that, you know, I financially have to see this play out, okay? Risk management comes first, but what I could see for Apple is that this is a wave 1 and a wave 2 from this low. This 1, 2, 3, 4, 5 waves impulse could end a pretty important rally at 200. Then for the March quad witching date, there'd be a really nice buying opportunity in the indices and in big tech. That's just something that's in the back of my mind. That's not something that I'm betting the farm on. And I would not short Apple at 200, by the way. Corrections in Elliott wave theory, wave 2 and wave 4, the ABC waves, are not traded. A lot of wave theorists, especially the ones that sell discords and services, they don't want you to know that you're not supposed to trade wave 2 or wave 4. Okay, you're not supposed to trade wave 2 or wave 4. You're only supposed to trade waves 1, 3, and 5, the waves that are clearly subdivided into 1, 2, 3, 4, 5 waves impulses. So this is Google. If Google is above 2,621, my belief is that a wave 4 is already in, and from this low, we formed a wave 1 and a wave 2. That means the next minimum target is 3,265. From there, I expect a shallow wave 4 and kind of a marginal new high for wave 5. But very similar to Apple, it's the idea that if we wake up and see that Google's above 3,300, you know, we see Apple's above 200. Let's say it's Valentine's Day. Let's say the March quad witching date is right around the corner. Let's say the kid at the bus stop is talking about inflation, right? We might be looking for a quad witching correction in March. But I want to see a melt up first. I think Google shows this could be a wave 1 and a wave 2, and a wave 3 to 3,265 could be very explosive before a shallow wave 4 and a marginal wave 5 higher. So I wouldn't bet against Google. I think it's a great gauge right now. It's getting a little tight, but I want to see 2,621 not get broken. I think this is a wave 1 and a wave 2. A wave 3 to about 3.3K is expected before a shallow wave 4 and a wave 5 higher. The minimum wave 5 target is 3,323. So that's Google. We're going to talk about XLC right now. XLC holds about 20% Google and 20% Facebook. I am waiting for the options market to make it very clear that Facebook is ready to explode. The last few rallies in Facebook have been foreshadowed by very low implied volatility and very high liquidity on Facebook options. So if I go to options and I see that Facebook is on the long straddle or the long strangle screener, I'm going to be talking about Facebook a lot, but I'm going to wait for that. I think that XLC shows that Google and really this whole kind of communication sector could be a really great roadmap in the future. This is a wave 1 and a wave 2. I think this is a wave 3 because it goes past the 161.8% extension of wave 1. Now I believe we're ending wave 4 between the 38.2 and 50% fib. So I want to see that XLC holds above 71. I think a wider invalidation is that 61.8% fib, which is about, I think, 68. Right, so 68 is going to be the invalidation. We'll call 71 the stop. And I think that XLC could be a really nice roadmap. It looks very similar to Google. Wave 1, wave 2, wave 3, wave 4. The length of wave 1 placed at the wave 4 low says XLC can go to 99. Now, this wave 1 is 5 months. So this could be the idea that maybe the melt up takes a little longer than I've kind of said earlier in this video. Maybe it's not the March quad witching date. Maybe it's the June, but I think XLC is a really important roadmap. Wave 1, wave 2, wave 3, wave 4. The length of wave 1 placed at the wave 4 low can take XLC to 99. So I don't want to make too many, predictions, especially about corrections in the future. I think Microsoft above 295, and I think the NASDAQ holding the 78.6% fib of 362. Those are the most important levels in this video. If we're above those levels, I'm expecting a pretty explosive rally in a lot of tech stocks. Here is NVIDIA and AMD. What we just talked about, there's been fluctuations in leadership. Right? All of a sudden, Micron, Qualcomm, Intel, they're doing a little better than NVIDIA and AMD. Not by a lot, not by a ton, but it's a very similar idea. I can see a lot of retail traders saying, NVIDIA's done, AMD's done. I'm not quite sure that's the case. I think this is a wave 1 and a wave 2. I think this is a 1, 2, 3, 4, wave 5 that's going to occur. Now, the deeper this wave 4 correction gets, the more likely that wave 5 will not be the length of wave 1 placed at the wave 4 low, which would take NVIDIA to 371. There could be the idea that this is going to be a wave 5 that is the length of wave 3 placed at the wave 4 low. That would take NVIDIA a little higher to that big round number of 400. So I've been talking about NVIDIA for a very long time from these levels. So I think it's pretty fair that NVIDIA getting to 370 to 400, that could happen by the end of Q2, more conservatively Q3. But I think advanced micro devices and I think a lot of other semiconductor stocks really say that we shouldn't be betting against NVIDIA. So right now, the best invalidation level and really always the best level for a wave 4 is the wave 1 high. So the wave 1 high is 230. If we're above that level, NVIDIA could get pretty explosive. So the length of wave 1 placed at the wave 4 low can take NVIDIA to 371. If we go past 371, we could be going the length of wave 3 placed at the wave 4 low. That could take NVIDIA to the big round number of 400. So here's advanced micro devices. AMD is a very similar story. We'll talk about a little shorter term view, but it's a kind of a similar idea. From this low, wave 1, wave 2, I think this is another wave 1 and an ABC wave 2 because we go past the 161.8% extension of wave 1. So I think this is a wave 3. Now we're having the textbook wave 4, that retests the wave 1 high. That is the most important LA wave principle. Wave 4, retest the wave 1 high. How do you know it's a wave 4? How do you know it's a wave 1? Well, wave 2 should go past the 50% retracement of wave 1. Wave 3 should go past the 161.8% extension of wave 1. If both of those things happen, then a wave 4 that retests the wave 1 high will most likely lead to a wave 5. I believe wave 5 will be the length of wave 3 placed at the wave 4 low. That could take advanced micro devices up to about 190. So looking very good for AMD, looking very good for NVIDIA. Let me make sure the invalidation level is clear. I still want to see the wave 1 high of about 122 to the 61.8% fib of 124 not get broken. So that's AMD. Here is Micron. Micron, all of a sudden the quarter changes and it's not a loser anymore, right? And of course they'll say, oh, well, they reported earnings. Okay. Wave 1, wave 2, wave 1, wave 2 at the 50% retracement. So they reported earnings, but I talked about Micron in this range because it had very close to 0 implied volatility rank, and it was in the top 200 options volume and open interest. So that kind of signals that there's a lot of buying on, or at least there's a lot of activity on Micron's options, right? So there's a lot of activity on Micron's options, and implied volatility rank is close to 0. That means that options on Micron are very cheap. So if options on Micron are very cheap and there's a lot of activity on them, then the smart money probably isn't selling options on Micron. They're probably buying options on Micron, and that's exactly what the case was. This was a wave 1 and a wave 2. We held above the 61.8% fib of 63. The length of wave 1 placed at the wave 2 low says this is an explosive wave 3 base breakout on higher than average volume. The classical traders, they're going to love this. And I think they're right. The length of wave 1 placed at the wave 2 low says a minimum wave 3 target in the future is 121. So that looks pretty good. Micron followed Qualcomm, right? So I was talking about Micron before earnings because Qualcomm had already exploded, right? So I didn't even know that Micron had earnings that day. I'll be honest. I had no clue that Micron had earnings coming up. I had seen that Qualcomm had exploded above kind of this exact same wave 3 high. So what I said Micron's next and Taiwan Semiconductors is next. We'll find out about TSM tomorrow, but this is a wave 1 and a wave 2, a huge wave 3, and a wave 4 at the 38.2% fib. The length of wave 3 placed at the wave 4 low. By the way, yes, Qualcomm all over the bar chart straddle and strangle screener. The length of wave 3 placed at the wave 4 low says they were playing a move to the upside, and they're not going to stop until 232. Very similar to Micron going to 121. Very similar to Taiwan Semiconductors going much higher. So TSM does report earnings tomorrow. I'll be clear that reacting to earnings is typically a very bad idea. But for me, I hold through earnings because if I'm investing in a stock for the long haul, then I just kind of accept holding through earnings is kind of part of the game. So I think this is a wave 1 and a wave 2, a huge wave 3, and then it's almost identical to Micron and Qualcomm. In fact, if I kind of move these numbers to the side, you wouldn't really be able to tell the difference between Qualcomm and Taiwan Semis, except for the fact that Qualcomm has already exploded above this wave 3 high, and Taiwan Semis is still down here. I think this is a wave 1 and a wave 2, a huge wave 3, and a wave 4 that will be in if we're above 107. The length of wave 3 placed at the wave 4 low says we could see an explosive base breakout, just like Micron, just like Qualcomm for Taiwan Semis, that could ultimately take it to 208. And I think what's very interesting is that we're seeing a few other setups in the Asian markets play out. So this could be a very good sign for not just the semis, not just Intel, not just Micron, but also possibly for other stocks in the Asian market. So I think this is a wave 1 and wave 2, huge wave 3, and a wave 4. If we're above 107, we're within wave 5 to 232. I think that's going to be seen with Qualcomm, with Micron. Ideally, all these stocks will hit their targets very aggressively between Q2, more conservatively Q3. So I think that we're going to see by the end of the summer that Qualcomm, Micron, and Taiwan Semis targets are all hit. I think that Qualcomm and Micron, they're leading right now. Their targets could be seen possibly by June. So let's look at Intel right now. Intel, man, I thought Intel was a laggard, and I thought oil was a laggard, and I thought that all these stocks that are all of a sudden doing well, as soon as we change quarters, as soon as we change years, we have a new group of leaders, not just within the market, but within the sectors. So this is a 1, 2, 3, 4, 5 wave 1, now an ABC wave 2 at the 78.6% fib. So what we've been saying was it's just like the first quarter of 2021, where Micron and Intel, they're on the bar chart straddle and strangle screener together, right? We're calling them weak losers in favor of NVIDIA and AMD, and then all of a sudden the news changes. So I think this is a 1, 2, 3, 4, 5 wave 1, and an ABC wave 2. If we're above 47, we have ended wave 2. I do not think 47 goes. I think the length of wave 1 placed the wave 2 low can take Intel on an explosive base breakout to a minimum wave 3 target of 72, 73 before a shallow wave 4 and a wave 5 higher. Now, I want to see us get above this high first, but I'll just say the length of wave 1 placed at the wave 4 low. If wave 4 retests the wave 1 high, can take Intel in the longer term cycles to 93. So very similar to Taiwan Semis, very similar to Micron. Very aggressively, this 73 target could be seen in Q2, more conservatively, more realistically, Q3. But that would just be the minimum wave 3 target. We'd have a shallow wave 4 before a wave 5 higher. So Intel not looking like a laggard anymore, not looking like a weak loser all of a sudden. This is Netflix, 1, 2, 3, 4, 5, wave 1, ABC, wave 2, between the 61.8 and 78.6% fib. So this whole rally is from May to November. So that's a 6-month rally. The length of wave 1 placed way too low says 6 months from now, 8 months from now, more conservatively, wave 3, which is usually stronger and faster then the length of wave 1, placed at the wave too low, can take Netflix to 752 for a minimum wave 3 target. We are at the 78.6% fib, so the invalidation level is 478. Above 478, Netflix is heading into the 750 range, likely this summer, before a shallow wave 4 and a wave 5 higher. Here is Salesforce CRM. This is the pretty one. Wave 1, wave 2. Conservatively, this is a wave 3 and a wave 4 that ended right before the 50% fib. So we got close to the 50% fib, but I think what's most important is just within the cycle from this low that this is a wave 1 and likely a wave 2 that ended right now at the 78.6% fib. So clear invalidation, pretty close invalidation is 201. The length of wave 1 placed at the wave too low says Salesforce can go up to about 330 before a shallow wave 4 and a wave 5 higher. This whole rally, that's about 7 or 8 months. So, in the second half of the year, even in the summer, I could see Salesforce up well above 330 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low. If wave 4 retests the wave 1 high, can take Salesforce to 422. So very interesting chart. I like it a lot. I think it's good evidence for large cap kind of, software names like Amazon. So this is a wave 1 and a wave 2, a huge wave 3 and a wave 4. So let's just say we broke below this low of 3,175. I think that the most important cycle is within the low from 2,871. This is a wave 1 and a wave 2. I believe this is another wave 1 in an ABC correction that is ending wave 2 at the 61.8% fib. We form a beautiful wick. So if we're above 2,881, slightly further, $10 away, 2,871. This is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low can take Amazon up to 4,000 before a shallow wave 4 and a wave 5 higher. Now, 4,000 in this wave 3, that would be a minimum wave 3 target, right? Realistically, we're not going to stop at 4,000 for this, small wave 3. But what's important to realize is that even in the most conservative view, waves 1, 2, 3, 4, and 5, if wave 5 is the length of wave 1 placed at the wave 4 low, that could take Amazon to 4,660. In the longer term cycles, that would just end this blue wave 3. So all I'm trying to say is that 4,660 down the road, if this count plays out, is going to be a conservative target for Amazon. It's important to remember the debate that classical traders have. The classical trading debate is, have large institutions been accumulating Amazon, or have they been distributing Amazon for the past year and a half? And for every single other tech stock, without exception in big tech, that formed this exact same kind of early September 2020 high, almost all of them have gone the length of this entire rally, placed at this low. Amazon is the only one that hasn't. I think it's a huge laggard right now, and I don't think it's going to stay a big laggard. I think this is a wave 1 and wave 2. I think we hold 2,881. I think this is another wave 1 and another wave 2. And the big boys, they've been accumulating Amazon for the past year and a half, and they are playing a move to the upside. The length of wave 1 placed at the wave 2 low, says 4K is next before a shallow wave 4 and a wave 5 higher. For the kind of the short-term idea of going to 4K, this rally is from early March to mid-July, right? So 4.5 months, 4 months, 5 months, even 3 months, we can see Amazon at 4K before a shallow wave 4 and a wave 5 higher. Now, remember that wave 3 is stronger and faster than the length of wave 1 placed at the wave 2 low. So that means realistically, wave 3 probably won't stop at 4,000, and it's probably not going to be quiet. So Amazon's got a lot of upside. Here is the ONLN ETF. This holds a bunch of Amazon. It also holds a bunch of Alibaba. We'll talk about ARK F2, but what I'm trying to show is that this is a wave 1 and a wave 2, and this is a big wave 1 and an ABC wave 2, and ONLN is at the 61.8% fib for the very first time in this entire rally. So this is an e-commerce ETF, and it is at the 61.8% fib. This could be where a wave 2 ends, and then we have a big base breakout, right? Just like what Micron did, just like what Qualcomm did, just like what Taiwan Semis is probably about to do. I'm not correlating those three stocks, but what I'm saying is that this could be the left side of the base, and then all of a sudden we could have the right side of the base, a very high volume base breakout that is the length of wave 1, place of the wave 2 low, a minimum wave 3 in progress to 117 for ONLN. So we're at the 61.8% fib. So the only kind of level right now is the 78.6% fib, which is 42. So that's too wide. That's why I'm going to talk about ARC-F. But I wanted to talk about mostly big tech in this video. So I'm going to talk about ARC-F real quick, just because it gives a little better of a stop level right now. So ARC-F is kind of a similar idea to ONLN, e-commerce, e-cash, wave 1, wave 2, another wave 1, and an ABC wave 2 for ARC-F, just like ONLN. We are at the 61.8% retracement of this rally for the first time. This is the textbook place for a wave 2 to end. So this is a little better stop, a little tighter stop. If ARC-F is above 27, the length of wave 1, place of the wave 2 low, says that a minimum wave 3 target in the future is 81. So this is a full ETF that could more than double for a minimum wave 3 target down the road. So we can see why they would make something like this very difficult. I think this is a good evidence for not just e-commerce, but e-cash too, that this is probably a wave 1 and a wave 2. This is the left side of the base. We're going to have an explosive right side of the base breakout, and we're going to prove that this is all institutional accumulation during this entire kind of ABC correction. So that's ARC-F. Here is Tesla. We'll talk about Tesla. We'll talk about Lee, XPEV, and NEO 2. But really, this is a big tech video. I think this is a wave 1 and a wave 2, a wave 3, and a wave 4. So from this low, I think this is a wave 1 and a wave 2, a wave 3, and a wave 4 that ended at the 50% fib. So right now, it looks like Tesla is going to go the length of wave 3, place of the wave 4 low. That's going to take it past my original first quarter target, which is 1,368. That would mean that if we go past 1,368, Tesla's wave 5 is not going to be the length of this rally placed at this low. That means that Tesla is probably not within wave 5 on the larger degree. We could see Tesla go 1, 2, 3, 4. Wave 5 could be the length of wave 3 placed at the wave 4 low. That could take Tesla to 1,590. And that could prove that this is not a wave 4 correction that ended at this low in March. This was another wave 1 and another wave 2. So we could see Tesla go a lot higher. Okay, I think in any count, 1368 is a very important level. 1590 would be an extremely important level. But there is this idea that maybe some of Cathie Wood's targets aren't so crazy. I just posted about In-Phase Energy. I just posted about First Solar. Tesla, 1590, 1368, those are kind of the next targets. But we could see higher levels after that, probably a correction before maybe 2000. Anyway, here is Li Auto. Li Auto is a wave 1 and an ABC wave 2. I think this is another wave 1 and another wave 2 for Li. So this is a big tech video, but this is just kind of to show that EV, ESG could be going a lot higher. And this is supporting evidence for Tesla, which makes it supporting evidence for the NASDAQ. I think this is a wave 1 and a wave 2. I believe that Lee will hold above 25 and that this is another wave 1 and another wave 2. So the wave 3 target is 44 before shallow wave 4 and a wave 5 higher. That would mean 1, 2, 3, 4, 5 waves is going to take Lee into the 50s. More importantly, it's going to prove that this is a huge IPO base. The big boys were accumulating Li Auto and XPEV very aggressively during this time. Okay. And this kind of sets the stage for a more long-term rally than kind of what I just talked about. Tesla 1368, that's the Q1 target, and 1590, that's kind of the Q2 target. What I'm trying to show with Li Auto, what I'm trying to show with XPEV is that it's not going to be a straight line, but Tesla could go higher than that in the longer term cycles. So that's all I'm trying to say. Here is XPEV, very similar idea, very similar evidence, very pretty chart. Wave 1, ABC wave 2, another wave 1, another wave 2, just like NEO, just like Lee, but really just like Lee, this could be an IPO base. That means that the institutions were accumulating Lee and they were accumulating XPEV very aggressively throughout the IPO. That means that they have big plans for it. long-term plans. And we talk about a lot, the more recent a stock's IPO, the more long-term, the higher the risk reward. So I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. So the minimum wave 3 target is 70 before shallow wave 4 and a wave 5 higher. That's going to be huge because that's going to be an IPO-based breakout, and that's going to set the stage for a longer-term rally in Chinese EV, which most likely means a longer-term rally in Tesla than what I have previously presented. So here is NIO. How about NIO right now? It's getting a little further away from 26. It's giving bulls a little bit of breathing room. The next step for NIO is to break this downtrend line. A lot of Elliott wave theorists will use a clear downtrend break as evidence that a corrective wave has ended. I believe that this is a 1, 2, 3, 4, 5 waves impulse, and this is a wave 2 that is ending between the 50 to 61.8% fib. So if we're above 26, NIO can go a lot higher. So I'm really focused on the downside levels right now for NIO, but I'll say I believe this is a wave 1 and this is a wave 2. NIO is, in my opinion, ending the left side of the base. Now the right side of the base could be a very high volume, very explosive base breakout. So if NIO gets above 66 in the future, first off, that's over 100% from the current levels. But the bigger deal is that that would confirm that this is all accumulation by large institutions. And they have big plans. What we just talked about for XPEV and Lee, possibly long-term plans for NIO. This could be a wave 1 and a wave 2. So if we're above 66, the minimum expectation from an Elliott wave perspective is that NIO could go to 93, almost exactly 300% higher than the current level. So it's all risk reward, okay? 300% upside. The downside is 26. Li Auto and XPEV and Tesla support the idea it might be worth the risk. So here is QCLN, holds a lot of Enphase, holds a lot of Tesla, holds a lot of ON Semiconductor, which I didn't really expect, but there is a little bit of overlap in a lot of these ETFs with some semiconductor names and some clean energy names. So they attribute that to the chip shortage. I attribute that to ETFs, but I think this is a wave 1 and a wave 2. QCLN goes on a wave 3 and a wave 4. So I think from this low of about 53, this is a wave 1 and a wave 2, ending at the 61.8 to 78.6% fib. And I think this is huge evidence for Tesla. Remember, this is a big tech video, okay? So this is big evidence for Tesla. If QCLN is gonna end wave 2 at the 61 to 78.6% fib, then it's within a wave 3. The minimum wave 3 target would be 102 before shallow wave 4 and a wave 5 higher. Tesla would likely be going much higher with it, with NIO and with Enphase Energy during that time.